Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. 3 big guests, 3 big interviews. We will bring you all of it in a special supersized podcast. First, SEC Chair Gary Gensler on regulation, on the markets, and naturally, on Bitcoin.
And it's an innovation. But innovations don't long thrive if they don't also build trust. I mean, the automobile wouldn't have survived if you didn't have traffic lights, if you didn't have stop signs.
Then, billionaire investor David Tepper in a rare interview.
And we can't get you on camera.
I'm not a recluse.
Kind of a recluse.
He just doesn't like us.
His big take on where he expects stocks to rally, and it may surprise you.
You can't be short the U.S. Right. You can't be short anything in Asia.
Right.
Anything
Nothing.
in Asia. Nothing.
And entrepreneur, shark, former basketball team owner Mark Cuban. He's a key business voice weighing in on the election and throwing his support behind Vice President Harris.
Think of this as a business and she's the CEO. She went from lack of favorability, lack of awareness, and way behind Donald Trump, right? To here we are 50 days later from where she started. She's at worst tied.
Plus, the green room encounter we were waiting for. Mark Cuban says he'd be head of the SEC.
I feel honored to be in this job, and if Mr. Cuban wants the job, it's because it's one of the best jobs in Washington.
It's Thursday, September 26th. Squawk Pod begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square.
Back, yeah.
That was an actual fly landed right on my nose.
Again. It's always good.
I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and we've got a huge lineup coming for you today. It includes billionaire hedge fund manager David Tepper and billionaire investor and entrepreneur Mark Cuban. 3 big interviews you don't want to miss today.
This is an interesting dynamic. Then you got Mark Cuban here, who I just saw yesterday make these comments about Gary Gensler that were so beyond the pale, and they might pass each other walking from the green room. He'll be on too. All 3 will join us on the Squawk set, but not at the same time.
The Federal Reserve Bank of New York hosting its 10th annual Treasury Market Conference, which brings our next guest to town, and he is at the table. Joining us right now is SEC Chair Gary Gensler. Thank you for joining us.
So good to be with you.
There's a lot to talk about. I want to actually talk about market structure, but I also want to talk about your job and what you're doing, crypto, and so many other things. But I want to start with this, because I actually am curious about it. And I'm curious about it actually also maybe from the context of competition, which is to say that we're now looking at a marketplace where effectively 30% of the S&P 500 is basically in like 10 stocks. And that's double from what it was not even 5 years ago. So is that a problem, for, as we think about risk in the system in a way, and is there anything you can do about it if it is?
As a securities regulator, we're market neutral. So I just want to say that to all your viewers. But as investors, when you think about it, you have risk if there's concentration, for sure, because if you buy an index fund, which as Jack Bogle, who started the index movement at Vanguard, said, why buy the needles when you can buy the haystack? Buy the whole market. So it's a very efficient way to invest, but you do have, the risk of the underlying stocks. And as you said, whether it's the Magnificent Seven or the top 10 are a big chunk of that.
You have come under a lot of criticism recently, which you know about. Almost on both sides, and I'm curious where you think your own job is and lives right now after this administration. I say that because you've got Trump on one side saying that if he wins, he's going to fire you, and you haven't gotten a ringing endorsement yet from the vice president, and we're going to have Mark Cuban on later. He'd like to take your job, and I'm just curious, as a human, how you think about all of this.
Well, I feel honored to be in this job, and if Mr. Cuban wants the job, it's because it's one of the best jobs in Washington. It's overseeing the $120 trillion capital markets. It's looking out for investors and capital formation on both sides. Now, what have we been trying to do? We've been trying to make the middle, the markets, less costly, which is called more efficient, and less risky, which is called more resilient. And I'm really proud of what we've been able to do in the equity markets and trying to like a simple thing like saying that you can get your cash one day after you sell your stock instead of 2 days later. That's called shortening the settlement cycle.
Right.
Or that which we're talking about today, the U.S. Treasury market, to try to instill greater competition in that market by promoting what's called all-to-all trading. I mean, these are the things that are really,
it's less sexy to the broader world, but maybe super important, you think, underneath the market.
The stock market is $55 trillion. Our U.S. stock market is bigger than any others, 5+ times the Chinese stock market, to give you a sense. So we're the envy of the world, but just like a gold medalist, you have to keep improving. You have CEOs on this stage who sometimes lose market share because they don't constantly improve. So I love the part of the job where we can drive lower cost, lower risk.
You could make the case that both
markets
sides don't really like you. You're probably a good regulator, right?
There you go, Joe.
I'm throwing you bones. I'm good.
What is your take, though, on the argument, and especially around crypto, but other things as well, that rather than create new rules or even new laws that might have to be put into effect, that you have effectively regulated through legislation? I mean, that is a huge...
we don't legislate.
No, I understand that you don't legislate, but that rather than have legislation or push for legislation or even implement rules that could be with real sort of bright lines, if you will, that what's happened here, especially in the crypto world, is that it's been done through the form of legislation. I mean, not legislation, through lawsuits, effectively.
So what we are a law enforcement agency, and Congress set us up to be both. We oversee the markets. We approve all those registrations when people go public and so forth. But we also, about 700 plus times a year, bring actions. We have to go in front of a judge and sometimes juries. So now it brings it back to this new innovation. And what Satoshi Nakamoto did, we're almost at October, so it's almost the 16th anniversary, 16th birthday of Bitcoin.
Right.
And it's an innovation. But innovations don't long thrive if they don't also build trust. I mean, the automobile wouldn't have survived if you didn't have traffic lights, if you didn't have stop signs, and even cops on the road to make sure there weren't accidents. And so that's part of our role as being cops on the beat, and the rules are about the traffic lights to make sure. So in crypto, if you want to raise money from the public, there's a basic idea that you put out fundamental disclosures so that the investing public gets to choose.
So is your argument that you're doing this to make crypto stronger?
We're again merit neutral. Crypto is only a small part of our capital markets. I mean, it's a little less than 1% of the world capital markets. But it's basically to instill trust and protect investors. Look at the leading lights in this field, in the crypto field just 2 years ago. A number of them are in jail right now. And I'm not just talking about SBF. I mean, a number of others. Yeah. And there's been tens of billions of dollars of losses and bankruptcies and so forth. What field in America, innovative field in America, survives without building trust in that field and protecting investors or consumers? You know, if you're selling cribs or something, you don't want people to have a problem with the cribs.
What we've heard from both candidates running in this election, first from candidate Trump and then from candidate Harris, is that they're going to be opening the doors probably and being more open to what crypto enthusiasts would like to see. Does that pose a problem, or are the rules kind of laid out at this point, the ground rules?
I'm not going to comment on elections. I'm in a role that I've worked on elections, and I love that too.
No, I'm not asking for a comment on the election, just on the policies that both candidates seem to be embracing.
But on the policies, I think it's quite clear that investor protection helps build innovation. Innovation is compatible with investor or consumer protection if it's about automobiles or cribs or anything else. I think they complement each other. And I said this when I was teaching back at MIT. I said, this field will not long survive if you can't build that investor trust in the markets.
So does the idea of a looser policy concern you, that it would break down trust and the public would be at risk?
Well, I think that we have a time-tested set of laws and rules in our securities markets. Basic things. Investors get to decide, but they get disclosure. Roosevelt called it the Truth in Securities Act. the basic idea, we're in this building that NASDAQ exists. NASDAQ doesn't have the conflict of also running a hedge fund, trading on the market, and those conflicts inside of those. And so it's sort of like ensuring that you get the disclosures and you're protected against, kind of the insiders.
But there's
rigging
some argument
the
to be made that you want this, that actually it would be better if all of this business was happening in the U.S. You talk about an SBF. Obviously, that was taking place in the Bahamas. And, a lot of people were trying to do things in other places. If there was a real regime here that everybody could trust and we had established rules, and there weren't these questions about whether you were going to go over the line or you're behind the line, where the line was, would that be better?
I think that we do have those rules.
So you think those lines exist? Then why do people in the industry say that they don't know what the rules are?
Look, not liking the rules is not the same as that there aren't rules. And I think there's a lot that have profited off of the public's interest in this field, but profited without the proper disclosures. And inherently, there's business models that have a lot of conflicts. And we've seen the results of that time in and time again. Outside of crypto and inside of crypto, we see what happens when there's so inherent conflict. So we've got 90 years of experience with this, Andrew. It works reasonably well. We've got the deepest, most liquid capital markets. We're trying to make them more efficient. What we're doing in the equity markets, what we're doing in the treasury markets.
To top tier crypto. That's my take.
What's that?
I think you're warming up to top tier crypto. I don't think you think it's a monolith. I think you think there might be some actual usage or benefit to top tier crypto. Would you say that recently you're evolving to where? Go ahead.
Joe, where are you on what's called altcoins? There's 15 or 20,000.
That's what I
where
know.
are you, Joe?
But when you came in, you said, that I probably only own Bitcoin, and you act like that's okay for me because I don't own all the garbage. I think you were thinking. So I just get the feel.
Garbage was your word.
I know, but are you warming up to
kind of a word?
Huh?
It was not that kind of a word that you used.
Actually,
right.
Joe, for the public, used a stronger word than garbage.
I did. But are you warming up to, do you see that it's probably here to stay and something that could be useful?
This is something I said to students 4 and 5 years ago.
I know, but you didn't say it to once you were the SEC chair.
No. That this field will not long persist without investor protection or consumer protection. Number two, many of these projects, without prejudging anyone, are tapping into the public's interest to raise money. That's the classic securities sort of protections that you put in place. You can decide to go long or short these projects, but you need the disclosures. And as it relates to Bitcoin, my predecessor and I have said that's not a security. You now have a way that you can actually express that view, buy into that through exchange-traded products, traded on NASDAQ, traded on New York Stock Exchange, and the like.
Okay, that's a yes then.
Where do you think Bitcoin is going to be in our society 20 years from now? If you were to sort of,
I don't really know.
You have any idea?
I don't know. I mean, there's 7 billion people around the globe. I'm not going to make a prediction as to any one project, but what I would say is the field is going to have a challenge building trust, and it already has a challenge building trust when there's so many fraudsters, scammers, grifters in the field, and there are.
But what happens if, for example, former President Trump is talking about whether we should have effectively a Bitcoin reserve fund, a sovereign Bitcoin fund? Would you be in favor of something like that?
Again, I'm going to
take the policy out of it. Take the politics out of it. I'm just asking, if someone in Congress came to you and said, "Hey, Gary, we're thinking of creating a sovereign wealth fund in Bitcoin," would you say that's a good idea? That's a bad idea?
I would say I'm going to stick to the role I'm in. It's a great role overseeing as chair of an agency.
But you're a very smart
markets.
guy who knows a lot about this space. You've taught about this space. You should. I imagine you have a view. Is it that you don't feel like you can share the view, or it's that you don't have a? I don't believe you don't have a view.
No, I have a view. I have a view.
And you're saying it's the role. Given your role, you think you're not supposed to say.
I think, given my role, and also we're in election season, so I just think for the listening public, I will stick to, my chalk lines. And my chalk lines are securities markets, and Chairman Powell and others at the Federal Reserve could speak to that. But yes, I do have a view on that.
Go ahead.
Oh, go ahead.
No, please.
All right, I know you can't comment on specific cases. So what would you do?
Are we still on crypto?
I'm changing. I'll move on to a different topic. You can't comment on specific cases, but let's say, hypothetically, you were investigating someone and they didn't show up for a deposition repeatedly. What is the...
You're right that I can't comment on any specific cases, but no one's above the law. That's our system, whether it's securities laws, whether it's other laws. And it's really important that we're talking about trust again.
Right.
Trust in the markets is that whomever is in those markets, that they follow the laws. And Congress has given an agency like ours authorities to compel testimony. Mm-hmm. So in your hypothetical, that's an important part. And those can then, the courts, we don't do this alone. The courts are involved. And that's an important protection. I really truly believe in the courts system.
If somebody doesn't show up to the depositions enough, what should happen to them?
That would play itself out in front of a judge.
I understand, but what would the SEC's position be around a CEO not showing up in court repeatedly for depositions? That you could say broadly. You don't have to talk about Elon Musk. You could talk about it in the broadest context, which is if a CEO in America doesn't show up repeatedly for the deposition, the approach and policy of the SEC should be that you should be asking for what? You should be asking for fines. How much should the fines be? I'm just asking.
No, I understand, but as a general matter, we then have an authority that Congress has given us to go in front of a court and have that court compel that testimony.
And compel that how? Meaning, would you say that then they should go to jail if they don't testify?
Again, I'm not.
I'm not asking you to.
It's a live matter, Andrew.
No, we're not talking about a live matter. We're talking about a hypothetical matter. And is this the first time that's ever happened?
Again, it's important that no one is above the law, whether it's securities laws or other laws. But the way our democracy works, an agency like ours, part of the executive branch, goes into a court, and the court ultimately then assist an executive agency like ours, the Securities and Exchange Commission.
So you don't ask for a particular fine, or you don't ask for a particular remedy or penalty, except to say...
We're looking for evidence. We're looking to talk to somebody. That is what we conduct, and these are public figures at any time, 1,500, 2,000 investigations, and these are public figures. And many of them, we follow the law and the facts, and we close them. We don't bring any fines. We don't suggest to a court that there should be any penalties. But some we do, and some we settle. But at the investigative stage, it's important that we have an ability to gather evidence.
Gary, there's still a perception that, I don't know, take your pick, certain members of Congress have a pretty good deal in terms of being able to, I don't know, be very effective at trading stock under certain. Have we got an answer to how we bring back trust in the markets, that it's an equal playing field for everyone?
Look, again, we're going to find Joe and I are going to agree on some things. We might have had some agreement on 15 or 20,000 tokens.
Just Bitcoin? I don't understand why you think we disagree on things. But what should we do?
No. Look, regardless of whom they are, whether they're in Congress, whether they're walking on the streets right there in Times Square, the law says do not trade on material, non-public information. But it's regardless.
I know.
And we are only 4,900 people at the SEC, and we get literally something like 3,000 to 5,000 tips, complaints, and referrals a month, 40,000 to 50,000 a year that we have to look at, see whether to close it out or pursue it into an investigation, and so forth.
But it's hard to oversee. It's hard to go after the people who are responsible for overseeing you.
without fear or favor, we're willing to do that.
Well,
maybe sometimes that's why we're not, so people don't warm up to us as an agency.
And I think I've asked you this, and I've put out the idea before, which is you do have special rules for CEOs and managements of companies. It's very specific about what insider trading is, and disclosures and all of that, right? And how quickly they have to disclose things and the like, right? We have special rules for that.
And can I say something? I'm proud of something we did under this administration, under my time, was that those insiders, if they want to sell their stock, they have to do it according to a plan, and they have to follow the plan and can't sell the stock for 3 months.
And so that one of the questions I am unaware of you either proposing a plan around Congress or members of the Senate, or proposing any kind of plan over the brokers who effectively manage money or facilitate those trades. And you actually do oversee those people and could if you wanted to, but I think you don't because you'd be biting the hand that feeds you.
I think of it a little differently, Andrew. I appreciate what you're saying, but it's really up to Congress if they wanted to change the laws or rules with regard to them. But all members of Congress are just like you, Andrew,
the self-belief,
not to trade on material non-public information, but you're not inside the company. So inside the company, there is added
And what I'm suggesting to you is that in many cases they are inside the company because they are actual demonstrable insiders given the meetings that they're having. And as a result of that, whether they should be considered a special class, in which case, given that you oversee the folks who actually facilitate the trades, whether you could actually change policy or at least even propose policies to deal with that. Talking about the credibility of the markets.
And trust in the markets.
Right, people don't trust the markets because they think the senators and the Congress people are insider trading. They think the whole system's rigged and a scam. That's what they think. And the question is there a role for you to play in that?
There's currently a role, and we do play that role, and with regard to if somebody, whether it's Andrew Ross Sorkin, Joe Kernan, or a member of Congress who's getting a whisper from the insider and trading on it, that's against the law, we'll pursue it.
I think that we have much stricter rules at this table than those people do. So I would actually suggest that we should be in a different category, or they should be in a different category. But it's great to see you, Gary Gensler.
It's really great to see you, Becky. Sorry we didn't get to chat,
No, that was great.
What we had together today was really nice.
Thanks, Joe.
You're welcome. Thank you. I think you felt it.
Yeah, I did. You want my job too?
Everybody wants the job.
I definitely don't. I think you should try this job.
Do you want your job, Gary? Do you want it again? And if there's another,
I love this job. I really do. It is such a remarkable privilege. It's a great staff. It's a gold standard. These 4,900 people are really ginned up, and they could earn a lot more money. We have lawyers that can earn a lot more, economists, accountants. I don't think anybody could do what you do. I don't think.
Maybe not.
Maybe.
3:30 is not
maybe
easy.
Scott Schneider. I don't know.
3:30 a.m.
But no, it's a great job, Becky. Really, it is. It's.
All right.
I can't believe I'm in this job. I love it.
Tease will be next.
Next on Squawk Pod, David Tepper, billionaire investor and Carolina Panthers owner, is known for his big swings.
Because that's you, right? You still got those big financial intestinal fortitude. You still have.
I still have.
Are you still making big bets that can pay off or not?
He tells us the bets he's making in tech, investing in Asia, and why in 2024 he's voting for divided government.
You have a populist on one side and a progressive populist on the other. Do I want all Democrats? No. Do I want all Republicans? No.
Much more to come right after this. Welcome back to Squawk Pod. Our next interview in today's triple threat lineup is billionaire investor David Tepper. His fund, Appaloosa, has posted an annualized return of more than 28% in an impressive stretch from its founding in 1993 through 2023. That's 30 years. He's watched the markets, global central bank policy, downturns, and technology's rise, bust, and meteoric rise again. He got into all of that, what's in his portfolio, and much more today with Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Here's Joe.
Right, we recently learned that he sold an 84% of his stake in Nvidia in the second quarter and increased bets on China. Joining us now is David Tepper, founder and president of Appaloosa Management, owner of the NFL's Carolina Panthers. Now I'm going to start the intro totally differently by bringing up somebody else. So there's, Druckenmiller.
Sure.
All right, so 30 years, 30% returns, never a down year. I asked him 5 years ago, who does what you did well now? And he goes, I'm a chicken now. He doesn't take any big bets. It's family money. He doesn't do what he used to do. He said David Tepper is the guy who has the intestinal fortitude to make huge bets that pay off massively. And we haven't seen you all, but that's the intro that I would give you, because that's you, right?
Yeah.
You still got those big financial intestinal fortitude? You still have? Are you still making big bets that can pay off or not?
I think over the last, listen, I mean, we're probably, I think I do have that. On the other hand, probably take smaller positions than I have in the past.
So you getting more conservative in your old age, or? Yes
and no. Okay, yes, over the last couple years, probably a little bit more conservative. On the other hand, we were up the last couple of years in 22, 23, whatever, 20% and 12.5%.
Yeah.
When I guess the market was down one of those 2 years. So, our absolute returns are better than almost everybody in the market. So we still got that going for us, but
which is nice.
Doesn't hurt.
Yeah, no, it's from Caddyshack.
So,
okay.
So yeah, no, I do, and we can talk about that.
And you're a recluse, and we can't get you on camera.
I'm not a recluse.
Kind of a recluse. I see you at the golf course.
He just doesn't like us.
He does like you don't like camera, but you don't
guys.
Like appearing on camera. It's very hard to get you on camera.
I mean,
sometimes we get phone.
Here he is.
But that's where I'm going with this.
I do
because you called me. You said I have something to say. So you must have something to say. That's what I'm getting.
Well,
to.
I had something to say. I still do have something.
Well, that's why we're excited. Because we want to hear what you have to say. Why did you? What compelled you to want to? I mean, you're not
to agree to be on.
Yes, to agree to this.
Well, I thought that what the Fed did last week would lead to China easing, and I didn't know that they were going to bring out the big guns like they did. And I think there's a whole shift. I listened to you guys a little bit before I left home to come over here, but nobody talked about it this morning on your show.
We did take care. I said it.
And you talked about it, but no guests talked about it.
Right.
I'm like, whoa. This is like.
So this is what compelled. This is a major.
It was before what they did last night. I thought they were going to start doing things, and they would have the room because of what the Fed did. The Fed basically lowered 50 basis points, and they used the magic word about 5 times, 10 times recalibrate. Recalibrate's a really interesting word because they said we have room. Besides this, we're going to do something. I don't know if they're going to do what the market has in it, but they're going to do something besides the 50. Another 25, 25, 25 seems like has to be done because they're basically, a long time ago I told you that you have to do what people tell you to do. The Fed puts out a white paper, you listen to what the Fed does. The Treasury does. Governments do what they tell you they're going to do, and the Fed told you they're going to recalibrate interest rates. And what that means is they have a lot of room between where inflation's running and where interest rates are, and they think they're pretty tight, and they have to bring it back towards neutral. So does that mean that it comes down? It's funny how people wave at you in here. That it comes down, as much, as much as is in the market right now? No. But does it mean that one or two, probably 2 or 3 interest rates, 25 basis point cuts, they have to do? Or they'll lose credibility? Yes. So you have the Fed. With that in mind, it kind of gives China the policy breadth to lower rates. So we thought, okay, they're going to come out and lower rates, right? And maybe they'll do the fiscal stimulus that everybody's been calling for, and they'll do the aggressive easing that they've called for in the past. So when that came in, we got a little bit longer. We got a little bit longer, more.
Got longer Chinese stocks?
More Chinese stocks, okay. And so I have limits, historic limits. I probably said a long time ago I don't go above 10 or 15%. Well, that's probably not true anymore. Because I set my own VAR. I don't have this VAR nonsense they have in the marketplace. There's value at what I can sleep at night with.
It's
That's the
interesting and we don't always, when we hear the Fed, okay, they go 50, they may go more, we think, oh, mortgage rates in this country. Oh, we think business loans in this country we think interest on the net. You immediately thought China and currency differences around the world. So that was more important to you.
Because the undervaluation is, listen, you can look at your chart and look at a chart of Bob on your screen right there, whatever stock you like. In China, they are, even with the recent moves, they're like on a flat line low compared to where they have been in the past. And you're sitting there with single multiple PEs with double-digit growth rates for the big stocks that trade over here. That's kind of versus what, you're 20 plus on the S&P.
Right.
Okay, and then you have, so the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongcheng, and I apologize because I can't even speak English well. He came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said we'll do more and more if needed. Now the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things in China. But they said that the other night, and I've listened very carefully what government officials say. So I took it that they did a lot. They exceeded expectations, and he promised to do more and more and more. Okay? And that's very strange language, especially for any central banker, but especially over there. So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the physical stimulus, that they were going to do. Now, physical stimulus, if you look at your charts, if you like charts, because you used to be a broker, and that was a good way to do things fast, what can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Japanese, they don't know what they want to do right now, but it doesn't matter what people think. They're going to be forced into things, and I can talk about that in a second. The Europeans are lowering rates. And now the Chinese are lowering rates, okay? And they're aggressive in how they're going to do it. And they're also, believe this or not, swap facilities to buy stocks. Encouraging buyback of stocks. Encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks. Not only encouraging it, lending you money to do it. And they're giving money like TELF money where you can put money out and you have no losses. But if you want to do it, you know how that thing works? You have only the money you put up and you don't lose money. That's a great deal for me. I want to be over there and borrow for some of this stuff. So
what about the relationship between the United States and China? How the Chinese government may or may not feel about American investors, but maybe more importantly, how the American government feels about U.S. investors investing in China too. What's the risk? How do you hedge that risk?
That would be a risk, and that's why you have limits on how much you would invest.
However, you just said you don't have those
the other thing I thought you were going to ask is about tariffs and stuff like that. I do not care.
Yeah.
This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption, directly saying it. So they're really doing all the things that people have asked them to do over these years. So what will happen on world markets? So now you want to talk with the United States. Most of your viewers are here in the United States.
Or Europe or Japan.
Or Europe or Japan.
You started on Japan.
Okay, so we can go around the world. Obviously, this is incredibly good for very undervalued Chinese equities, okay? Especially when the government's encouraging
the buybacks.
Buybacks, and for you to take risks to buy stock. Right. Take a loan out, buy stock, you can't lose money on your loan. Great deal for me. I would, if you want to be Chinese, is Sorkin a Chinese name? No, okay, so sorry. Anyway, sorry. So you have, so United States, so you have this world, and so I'm trying to figure the United States, so it's not really your first plot to go to invest right now, because you would say China first, Asia second, right? Mm-hmm. Asia at large second.
Okay.
Japan, then Japan, Korea, those markets. Also, actually, Asia and Europe before Japan, and I will tell you why. The problem with, you have to be careful a little bit about Japan, although I think it's still you want to be in the equity markets. If you look what happens, if China runs and they get the economy going and you get the animal spirits going, what happens? Chinese throw a lot of money in their economy. Who's one of the biggest beneficiaries in their own economy? Is Japan. And Japan, if they start running faster, I don't care what this election is, and they're worried about this candidate and that candidate. Some candidates might want to go to Abenomics, and I don't care. They don't even understand it yet. This just happened last night. The market doesn't understand it yet. What's going to happen? Japan's going to run too fast if they really stimulate there. And when Japan runs too fast, they're going to have to raise rates. And when they raise rates, the yen's going to appreciate. And if the yen appreciates, then you have to be careful about the stock market, not the stock, depending how it goes. Now, the stock market in yen terms, you should still make money, but how much does it move or not because of how it historically does, right? So you go around the world. The U.S., listen, the problem with the U.S., and then I could go European, the European index at 14 times multiple versus a 22, historically incredibly wide.
22 here.
21, 22, whatever you want to say for next year.
So Europe looks good.
Yeah, it looks interesting.
We're like last in Europe.
Well, Japan has the same sort of multiple right now, and you can say we have much better stocks and much bigger tech stocks and that. So the question here, where you don't have necessarily a cheap market, right? It's not a cheap market. It probably is, and I didn't listen to him. I listened a little bit, but what Cooperman said yesterday. But if you looked at it historically, it's a little overvalued. Okay, I would say that. However, I get concerned about one thing, because fortunately or unfortunately, I was around in the 90s. I was around in the 80s too, but I was around in the 90s. And in that market where the Fed, cut rates into Y2K, in a good economy, right. A relatively not a bad economy, but a relatively okay economy, you had those rich in before long-term credit. Rich in 97, relatively rich. Richer after long-term credit, and bubble mania in 99, early 2000. So I don't love. I'm a value guy. I don't love the U.S. markets on a value standpoint, but I sure as heck won't be short.
Well,
because I would be nervous as heck about the setup, right, with easy money everywhere, a relatively good economy, and China just massive stimulus coming in. So it would make me nervous not to be somewhat long the U.S. Now, so that's how the setup is. So you can't be short the U.S. Right. You can't be short anything in Asia. Right. Anything in Asia. Nothing.
Okay, but let me ask you. You said you have to be somewhat long the U.S.
Selectively.
So that's what I was going to ask. How would you be? Where would you be selective? What looks good to you? What looks bad to you?
Some things I don't want to talk about because I might be purchasing them right now, so it will make it harder for me to buy. But
he only wants to talk about the things he might sell.
Yeah, that's right. Exactly. Thank you. No, but look, today, if I wanted to do chicken long China's, I'd buy, and we were buying them, but because we're just part of our China stuff, I'd buy Win and LVS. Okay, to get a sort of Chinese play with people who can't go there. That's kind of an interesting assumption. Okay. Sort of stuff. Listen, we're kind of exploring different parts of the energy side of the tech market. Okay. Not to name anything in particular. We own a lot of, our book has historically a lot of tech names, Meta and Google, and we still own some Nvidia, and we own, different things. We own DRAM stocks.
You sold some Nvidia?
Well, we sold a lot of our Nvidia.
Stuff before, yeah.
But, listen, the stock we thought was, too high at the time and would come down. Unfortunately, we didn't buy it when it came back down. Right. But, so it's okay. It's really, those stocks like Nvidia is a question. Do you have enough power, okay, for the growth? Do you have the next generation models that can take their chip? So it looks great in 24. It looks great in 25. I have no idea in 26 and 27. I am no idea. Okay, I mean, if I was good, I don't believe my analysts. I don't believe any analysts. I don't trust myself. You know what I'm saying? I just don't know how There's too much. And you have these multiples out there and how it can go, and the variation of where that earnings can be on the out years is too much. So it's not my preferred vehicle versus other things that I have more confidence in how I can, how we can do in my shop, analysis on the earnings.
But you thought it was important to mention that you'll be playing the energy component of trying to supply all this new technology?
We're trying to understand it better.
But trying to understand it better.
Here's the thing.
Would you avoid green? Would you embrace green? Would you avoid fossil fuels? Would you embrace fossil fuels, natural gas? Which way would you do it?
I never think I'm that smart, so I just like to use common sense.
I made you out to be really smart.
Okay, you can try, but I'm not going to accept it. But I do have a heck of a lot of common sense, and this is what I know. I talked to some governors, around the country, both sides of the aisle. I'm friendly with everybody, as you know.
Yeah.
They're not going to let their nuclear power come offline. It's not going to happen. It's a joke. Some of these projections on these things are crazy. It has to be, if you're going to meet these power needs of what they need for AI, you're going to have to use natural gas. You're going to have to use natural gas. It's just...
And that comes from drilling.
Yeah, I mean, we have a lot of it. And, so you have to use... you're going to have to use it. You cannot take things. If you take a current nuclear plant and you think you're going to get these things, it will never get by these individual, PUCs. It won't. It can't. It's going to hurt the consumer too much. You can't hurt the consumer that much. It's nuts. So I hear these guys talk about, well, if we did this, if I was 7'2", I would have been in the NBA one day. I'm not 7'2". Okay, if you want to say something that can't possibly happen,
you still wouldn't be in the NBA.
I would still. I don't have the skills. It's a true story, but
you could be 8'2".
So that's an interest when they say. So I'm trying to understand what really makes sense, what doesn't make sense,
right.
And we're trying to figure that out right now. So it's fascinating to me. It's fascinating when you look at these tech stocks. It's fascinating in Nvidia, or you look at some of these things. Can you do for different reasons? There's different things as you go out years. Different things that have to happen to make the growth projections happen. I'm not saying it won't happen. I'm just not smart enough to know if they will. I know the probabilities that they will or not, but I can't. No, I mean, it's what it is. Okay, so I recognize those things, and people are making assumptions they're going to happen 100%. Well, the United States is a great country, and we innovate like heck, and things do happen this way, and usually you have flies in
We do have a fly. We have a
It's
fly.
one particular one, and if I get him, I'm telling you, I'm not even going to kill him.
I'm
not going to kill him right away. I'm not going to kill him right away.
Dare I ask you how the election plays into all of this?
So with the election, I am a big proponent of split government. And right now, as you're more than aware of, it looks like the Senate is Republican and the House is Democratic, and I'm loving life. And I don't care. I'm talking purely from this show. Okay, I don't care.
And what would you do if it was a sweep?
If it's a sweep on either side?
Democrat sweep.
So I'll just, and I don't want to talk about it that much politics, but I'll just say in general, you have a populist on one side and a progressive populist on the other. And if I listen to what happy day I hear more giveaways and more of that. So do I want all Democrats? No. Do I want all Republicans? No. I don't want more. Again, from a pure economics, there's other considerations, which is just not the show to talk about. But from this market perspective, an economic perspective, what's good for the economy, I want a split government, and I don't want all Democrats, and I don't want all Republicans.
And you think at the moment,
if I'm thinking about the markets,
and you think at the moment it's not impacting the markets either way, because you think that the expectation is that it's going to be split.
Well, not only the expectations there, people bet on it. The betting markets are that way, that it's split, and as long as it's split. And this may be a problem because the market thinks it's going to be split right now. So if it gets surprised, that could be a problem for the markets. But as long as it's a split, the market's going to be fine. They will not care because they're not going to let them do the things they talk about.
So, David, are you afraid to play AI directly? You're doing the sort of downstream ways of doing it. I mean, is it too hard to figure out? There's Nvidia, but
no. Listen, you have
what besides Nvidia and energy could?
Well, we have the regular stocks like a Meta has been a big beneficiary of AI.
Right. Llama.
All these. I mean, and just in how they do models, how they monetize their business, and other.
Is that a big trend for you, or is there something else?
It's a question how much is in the stocks and what the next generation is, how much more, because they've gotten pretty good returns, I think, that more than people appreciate in one of these numbers, and so they could have near-term all these stocks could have near-term surprises. Yeah. So the question is, what is it as it goes further out?
When you say surprises on the upside or downside?
Well, surprises on the upside if they can change the models, and some of the base earnings are good enough to give support for those stocks, versus we talked about, and I kind of like Nvidia, the price. Okay, so don't get me wrong. I could just love it. Okay. But you have to believe more in that versus.
Are you not a believer that long term for AI to actually work and to be a meaningful contributor to the economy,
yes.
that Nvidia's margins ultimately have to come down? Meaning, as long as they have it was like 70% margin, 80% margins on some of these chips, it's amazing, and God bless them for it. But at some point, to make this whole thing economical, I imagine those margins are going to have to come down.
Not till there's
It depends how much they make, right? But look, it's another concern potentially.
Do you have any Lilly, Novo? You have any healthcare? You got any biotech?
Are you asking me if I
just
take
trying to get as much as I can? Nope. I'm just saying. You watch Lilly? Lilly has been a growth stock.
No, I don't have.
So no healthcare.
Can I go back to China again? Just
which
I'm still trying to get my head around.
Which I think is the biggest thing that people really have to go and understand it, because it has implications all over in bonds, currencies, and stocks. We didn't talk about the currencies and bond side.
But just with the stocks themselves, I'm just thinking of your positions. Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days, but just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things we've seen are that you have about 12% of Alibaba. Does that mean you put those aside and you would own even more than that?
As I said, the value at risk model is what I sleep at night. I had a fine. I went over that limit on the Fed announcement, okay, in the last week. I went more when they said a day or two ago on their Fed, and last night I did more.
Just Alibaba, or are you talking
Everything.
JD, Baidu, PDB, the two Chinese ETFs, everything China?
ETF, I would do futures, right? Everything. Listen, a long time ago in 2010, I think I said everything.
And you
I remember when you said
and
everything.
You know what's good?
You were right.
Everything. Okay. So if they, this is incredible stuff for that place. Okay. So it's everything. Now I would love to see a pullback. Okay, because I will then my newfound limit, which might have been twice my old found limit.
25%?
You said 10 to 12. It's double.
20 to 24%. So
I'm
I'm
going to
saying
say what it is.
Is the limit 25?
I will have another newfound limit, okay, in a pullback, okay, if I see these absolutely be implemented. Because, again, you can look at these names, and you're talking about single-digit PE multiples with double-digit growth.
But you think there's
wait a second.
Yeah.
This is the other thing. You have some of these stocks with 50% cash. Some of these things you just put up on the board, 50% cash, 20% cash, 30% cash. And that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you this.
Did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the counter bet that you put on that, just in case?
You know what? I'm sitting here in a suit. My counter bet is that I don't care.
Yeah, I don't.
There is no hedge.
There's no hedge?
It's a hedge fund is an oxymoron for
in this case.
In this case, there is no hedge.
Because, look, I'm looking at a market where we're 20 times plus, right? Okay, versus a market that's single digit with double digit growth rates, and you have to and big cash pieces, which I'm not even adding into which would make it more, okay? So what is the multiples that you can make versus what you can lose, okay? And where's the risk in the near term? So what's the risk for me? The risk is it could be that, but that's going to be because the Chinese is going to get stronger.
But let me ask you.
And wait, this is the last thing I want to just mention to you. If you look, nobody's invested.
Right.
It's zero investment, and so that's going to mean in what you said is that people have to go. They're going to put cash in there. It's going to make the currency strengthen. And as the currency strengthens, that means they have more room in their minds to ease because it may be that instead of worrying about it going down, they have to worry about it going up.
Right. You've made big calls before, but then there have been situations where you've reversed quickly in a way that, frankly, the viewers may not always appreciate.
If these things don't come to pass.
Well, so that was my question. What is the thing that you would be watching for that would reverse this view?
if these things don't come to pass. If they're for some reason, they were just, they would have to, this was the 24, this is she.
Right.
This wasn't Andrew Sorkin equivalent, okay? This is she in this Politburo. So he would have to basically go out and put a strong statement and then reverse himself. Now, I don't know this leader as well as I do know some other leaders with some tendencies that don't like to basically reverse what they say so publicly and so loudly. These leaders don't usually like to say it. They usually like to stand by what they do. And
do you think he's locked in at least for some period of time?
I think he is. That could be wrong. Right. If it's wrong, then I might change it up.
I haven't heard you have fiction like this since the Tepper taper. That was the last time.
A couple of times. I didn't talk to you during the Fed white paper in the 2010 when it was kind of this. Listen, it's the same thing. You just read what these guys are saying. Powell told you something, okay? He didn't promise you. He told you some kind of recalibration. He has to follow through somewhat, okay? These guys basically more and more, never before. I love when people say never before. They do stuff. Okay, I'm not that smart. I keep telling people, I tell you last time, I'm not that smart. I just read what they say and do they have conviction? And these guys, they usually do what they say, especially when they have this level of conviction. It usually happens this way.
You told me to keep riding the horse, but then you never did tell me to get off the horse.
Well,
I don't know if you ever did get off the horse. Maybe you didn't.
Which horse are we talking about?
It was a couple of years ago. I can look back on the actual texts I have. They're all preserved for when you say things. But do you remember when you said keep riding the horse? And I was saying, are you going to tell me when I should dismount? And here you are, and you never did.
Because he never fully dismounted.
No, I don't think he did.
No,
I don't think he did.
No. So, but with the other things, listen. The big question for people. There's different big market bets out there that people have to consider. One is the big. Is a big carry bet on Japan, which can get blown out of the water. I'm not saying it's going to, because you have a lot of other near-term factors in there, and it can move the other way. But if they do this stuff, and you look historically what's happened when China's been running, Japan has a heck of a lot of currency appreciation. Not that people pay any attention to it anymore, purchasing parity type models, but that's 80-90. The things at I don't know where it is right now, 144. That's an interesting sort of situation. Now you have the interest rate differential, so it costs you money to have that trade to be long the yen, and that's been the big trade out there. The short China has been a big trade out there. The short and not even be long China is a big trade out there. So the disallocation of this stuff that happened last night and happened the last few days is potentially large in the marketplace. And eventually, depending what happens, now there's always tension in the world, in the Mideast, or maybe, who knows
we
what
have date at 8:30, David, so I'm just trying to
Can I just ask David one real quick question, which
Guys,
is, you said that
30 seconds.
back in 2021, that crypto and I believe
Including
Bitcoin was gold to you.
Yeah.
Do you still own it? Have you bought more? Would you buy more?
When I said it was gold to me, I didn't mean it was gold to me.
Right.
Great. It's like a gold type equivalent to me.
So do you own any?
I have a little bit. The expert my son is the guy that does, crypto.
Okay.
Sometimes we'll play with it, but I really don't have any investments in it.
Okay, yesterday, our very next guest, Mark Cuban, was on Fox News, and he was asked about his ambitions for a potential Kamala Harris administration.
But I ask you, Mark, whether you would entertain being a Treasury Secretary, Commerce Secretary in a Harris
Head of the SEC.
Head of the SEC, that's the job. But I'm pleased the head of the SEC, the Securities and Exchange Commission, because he's not a good cop for the securities industry. Bottom line, right?
No, it's awful. Bottom line, he's awful, particularly for crypto and for businesses in general.
Today, he's making his case to our audience, peer-to-peer, business leader to business leader.
Donald Trump is trying to come in with a hammer and say, you're the nail. I'm going to hit you with a 200% tariff, John Deere. Kamala Harris is saying, I'm going to give you incentives to manufacture more. Which do you think is going to work better with companies?
You're listening to Squawk Pod.
Up and Andrew, Q.
Vice President Kamala Harris sitting down for one of her first one-on-one network interviews since becoming the Democratic nominee for president. Here's an exchange that she had with MSNBC's Stephanie Ruhle about tariffs.
Tariffs aren't unique to President Trump. President Biden has tariffs in place. He's actually looking to potentially implement more. Where do you come out on? Is there a good tariff, a bad tariff?
Well, part of it is you don't just throw around the idea of just tariffs across the board, and that's part of the problem with Donald Trump. Frankly, and I say this in all sincerity, he's just not very serious about how he thinks about some of these issues. And one must be serious and have a plan, and a real plan that's not just about some talking point ending in an exclamation at a political rally, but actually putting the thought into what will be the return on the investment and what will be the economic impact on everyday people.
We've got a lot of ground to cover with our next guest. I want to bring in Mark Cuban for his takeaways. Mark is a billionaire investor, of course, entrepreneur, is also a supporter of Vice President Harris, so we know where you stand. I'm curious, listening to her there, and you called in a couple weeks ago to talk about what you thought she would be telling the public. And we quizzed you. We went back a little back and forth about just how much you knew versus what the public knew. How much more do you think the public knows now? And how much more do you think the public should know?
Well, I think obviously they know more. She's talking more. She's giving speeches. She was very clear about tariffs right there. And she's got 40 days to communicate other things. Remember, think of this as a business, and she's the CEO. She went from lack of favorability, lack of awareness, and way behind Donald Trump, right, to here we are 50 days later from where she started. She's at worst tied, right? People on her economic policy, she was behind Trump 25%. Now she's behind 11%. So she's making progress. And if she just continues along that trend, the trend is her friend, it means she's doing the right things. And so she'll keep on communicating new ideas, new elements. She was a lot more specific on tariffs and where she stands. The difference between her and Donald Trump, to her point, Donald Trump will say what fits to the audience. When I talk to her team about different things, whether it's healthcare, whether it's tariffs, whatever it may be, she goes back and her team does a full analysis. She doesn't just say yes or no. They really dig in to what she said. What's the impact?
But there is a critique that actually she will say whatever the audience wants, right? I mean, we look at the tipping, the tipping thing that took place in Nevada. Given some of the details that we don't have on certain things, is that because some of those details would be less favorable in certain audiences?
Do you see the Elon quote? I don't know what you think of Elon, but
I like Elon.
I like Elon too. But she was at 28% favorability,
right.
And then, as you say, things change. She's all the way up to about 50%. I would just argue that filling in the blanks does not account for that move, and that the media coverage has been so positive and almost, Mark, that it's like, we don't have to worry about trying to elect this guy who is clearly not up for another 4 years. And it's not Donald Trump. So they would have, the left and the people that need a candidate would have embraced anyone at that point. And ABC, it was 100% positive coverage of her, 92% negative of Trump. So Elon says, what changed the media coverage?
Okay, first, what's the most watched news channel? Who are the most watched and viewed and listened to podcasts? Who are the most watched and listened to or
viewed? Is it Fox?
Yeah.
Yeah.
Right?
Okay.
I mean, it's not close, right? The number one shows are all Fox. The number one podcast,
so
lean right.
Even in spite of that, she's been able to.
Not in spite of that, in spite of that, meaning the mainstream media is not who you think it is. The mainstream media truly leans right.
Maybe that's why it's only tied then.
Well, maybe, right?
I don't know.
Where do you think she really is in terms of what this election is, in terms of the polls and the betting? Do you look more at betting sites?
No,
what do you look at?
Like, I'm an investor in Polymarket, right?
Okay.
Through a fund, and U.S. citizens can't bet on there, right? So it's kind of a meaningless number. Now, predicted, I haven't really followed, so I don't know.
Right. I was, we've disagreed on things. We go back and forth sometimes on Twitter. I just think I don't know whether it's good or bad that there are half the people that under no circumstances, no matter what, would ever vote for Donald Trump.
Can you imagine why?
On the other half, this is where I'm getting.
Okay.
On the other half, there are half the people that under no circumstances can look at what her comments have been in the past, and there's just, for whatever, just having gone back to, with me, the Dukakis days, or the McGovern days, there's just no way that, and I'm not speaking for what I would do now, but there are people who think it's so patently far left and progressive, they would never, under any circumstances, vote for Kamala Harris. And here we are.
Right.
Have you convinced anyone to change?
Yeah, of course.
You've convinced people to change?
Oh, yeah, for sure.
Oh, I can't convince
Right, because
anyone.
here's what I say, right? Here's what I think is happening. She's learned, all of politics has learned from Donald Trump over the last 10 years. The way politics were done pre-2016 versus now is night and day difference. Not so much in the Democratic Party up until Kamala Harris. She learned what he did. He took over the Republican Party. The way the Republicans were in 2015 is nothing like they are in 2024. Now the Republican Party has basically become the family business. Kamala Harris has learned from that. She's basically taken over the Democratic Party.
That does not sound like a good thing, Mark.
It may or may not be, right? But it's a reality, right? In order to win, she said yesterday, she's not an ideologue. She's open to all ideas from everybody, from business, whoever. That's important. That's the difference. And when you listen to her talk, we talked about Donald Trump. Her team really does vet, even if it's no tax on tips. They vet the whole thing, and it's very considerate.
But there's not going to be
But when Bernie Sanders said she'll say anything, did the rest of the Democratic Party just go, "You idiot, shut up"? What are you doing? Because he said she'll move to the center, but she still holds dear all the things he holds dear.
Have you seen her talk to or about or with Elizabeth Warren or Bernie Sanders?
That could be calculated too, Mark.
It could be calculated. That's right. And it wouldn't be a bad move. But
it'd be a great move.
I truly believe she's gone.
What do you think of the fact that
really?
Yeah, because the country, she believes and knows that the country needs to come together.
What do you think of the fact that neither of these candidates talk about the debt or deficit ever?
No, that's a problem.
That it is the great giveaway on, and the question is, who's giving away more?
Yeah, yes, no.
There's a competition going on.
She's raising taxes, right? She was very straightforward.
Right.
Corporate income tax 28%, which is still cheaper than a tariff plus 20%.
Well, wouldn't you personally rather stay at 21?
It doesn't affect me one way or the other.
Not you,
for my businesses.
For everybody else.
For the country.
For everybody else.
Well, no, you have to look at the deficit, and the revenue has to come.
That's not where we should go for it.
What's that?
I don't think that's where
Where would you go for it then?
I'd go taxing his loans that he takes on his billions.
Yeah, but you know what? And I don't do that, right?
No, I know. But you know the people that
No, I know what you're saying,
are
though.
able to.
When interest rates were near zero net effective rate, right? Everybody did that because if you can't make more than 1% on your return, it was easy to, right? Now with interest rates of 4 or 5%, it makes no sense. So you can do that, and she's not opposed to it, but it's not going to generate as much money. I think there's a lot more revenue available from taxes on stock buybacks. And because taxes on stock buybacks, think about where the cash structure is in a company. If you have something to invest in R&D or whatever, you do it, right? If you have a company to buy or people to hire, whatever, you do it. If you can't find a better way to invest your capital, you buy back shares. So it's really saying, okay, let's tax the buybacks, and that'll create a ton of revenue to reduce the deficit.
It'll either create a ton of revenue or it will change business behavior. Lee Cooperman was on yesterday saying that, look, we saw the good stock buybacks. Then with prices at high levels, you saw a lot of bad ones too. He pointed out how much
there's
Intel
always bad ones, right?
Bought back at high levels. But if it does that, if it changes corporate behavior, you're not going to have the revenue you would have assumed from those
and that's
things.
fine too. That means they're investing it or they're paying dividends, right? So think about that. If it pushes them towards dividends, and I also suggested to them, and I don't know if they'll do it, is rather than for a family of four, I think if you have income under $89,000, then your dividends are tax-free, right? So you bump up that amount to $250,000 or $400,000 because if a higher tax rate on stock buybacks pushes to dividends, then it's actually tax-free money that goes into the economy. Remember when Microsoft did that special dividend of billions of dollars 20 years ago? That actually impacted GDP. So having big companies put money back into dividends and now investors truly buying because they get a return instead of just hoping the market goes up, that's not a bad thing either.
How do you feel about industrial policy? One of the things she did talk about was investing in a number of different industries in a big way.
In a big way.
Over the next 10 years.
Yeah, contrast.
There are some people who say we shouldn't have industrial policy like this and we've tried this before and it's been a mistake, and other people who say we need to.
Different world. Our military dominance, our place in the world depends on our ability to invest in AI. Period, end of story. Whoever wins AI has the best military. There's no question about it. And private companies, while they obviously invest a lot, the Department of Defense obviously invests a lot, we need to do more. We cannot lose that battle or we lose everything. That defines our currency. It defines how we compete in the world. It defines our military. So investing that is critical.
There was a piece out just recently about that there has not been a manufacturing boom, that there was post-pandemic for a year, but it's been bad. It's been bad for the past 2 years. The ISM, the index, has been contracting since 2022, right when the IRA was passed. So there's been no expansion.
Yeah, but Joe, okay, look, there's 500.
But are you sure that this was my fear, Solyndra. That's my fear.
Yeah, picking winners and losers, yeah.
Exactly. Right. Intel, we decide. Now Intel can't get out of it.
But now TSMC is making, 5 millimeter or 3 nano, whatever it is, chips already.
Right.
And that's needed. That's critical, right? That's critical for U.S. security. But to your point, right, what is it? 75% of manufacturers have under 20 employees, right? There's like 4,000 companies that have more than 5 manufacturing companies. Donald Trump is trying to come in with a hammer and say, you're the nail. I'm going to hit you with a 200% tariff, John Deere. Kamala Harris is saying, I'm going to give you incentives to manufacture more. Which do you think is going to work better with companies? Do you want to be underneath a hammer? Because when you put a 200% tariff on John Deere and only a 10 or 20% tariff on their Chinese competitors, their Chinese competitors are now less expensive than John Deere. And it's not so easy. We saw what happened with Carrier, right? When in 2016 they said, if you move down, we're going to tax you more, 35% tariff back then. And what Carrier did, they gamed the system. Right? They just fired different employees.
Do you think any of the 40-year highs in inflation are attributable to price gouging? And do you care that is the entire premise on?
No, you're misrepresenting what she's saying, Joe.
I'm watching her ads now.
Okay, so then let's talk.
You've seen the ads.
Yeah, of course. Right.
I'm going to
price
bring
gouging
down
during a crisis.
Okay.
During a crisis.
What do you think caused the 40-year? Do you think supermarket gouging had anything to do with?
No.
You think it was putting too much stimulus on top of a supply constrained?
Biden and
it just looks to me like they're not being truthful with this, and they're trying to deflect blame to corporations because of their record.
It's still important. There's going to be another hurricane. There's going to be another tornado. There's going to be another natural disaster. And there's 37 states that have laws.
But the free market comes in and
it doesn't, though, Joe.
It does eventually. It does eventually.
But eventually, meanwhile, 37 states have the same type of law. Right.
And what happened? By the way, how do you feel about the credit cards?
You mean
Mr. Socialist Donald Trump?
Trump wants to limit the credit card controls.
There's only one candidate that has brought up price controls, and that's Donald Trump.
But even when we talk about what the tariffs are going to do, in one case we know exactly what his tariffs did the first time: 1.9% inflation. We know exactly. That's where it was. That's where it was. The other thing, Mark, I still think immigration and illegal immigration is a huge drain on a lot of the jobs that we've added. There's been no net gain among natural born. I'm not saying I don't want immigration. We all love immigration. It's made this. We're all immigrants. We're all descended from immigrants. But I don't think you can have an open southern border.
No, I agree. And she agrees, too. She said the exact same thing.
She had a chance.
Yeah, but Joe, there's a lot of COOs that when the CEO leaves for whatever reason, come in, take over, and have completely different policies and approaches. Right? That's just the way it works. When you're second in command, you do what your boss tells you to do. He delegates authority to you.
But the border was supposed to be her.
Yeah, but it's still the same thing. It's his policies. What he said to her was, you go down and you use diplomacy to try to improve, to try to reduce the flow, the migration of people across the border, right? And when they finally came around, and it took too long, I agree, but when they finally got there, now look at the results. It didn't take a wall, but yet, the crossing numbers are where Trump's were pre-pandemic, at the same number. So it worked. So what she did actually worked, right? And look, let me just add one more thing, because we'll go into Haiti and all that kind of stuff. When did the civil wars in Haiti start?
When did we go to Haiti?
We talk about illegal immigration in Haiti and overwhelming communities.
But the Haitians were illegal immigrants, most of them who came in.
Well, they were brought over under the different programs, right?
Yeah.
But the point I wanted to make, they like to talk about no wars, right? When did the Haiti civil war start? In 2020, in May of 2020, during the Trump administration. What he could have done something to try to deal with that, and that would have preempted a lot of the problems that they're having now that he's talking about.
Let me ask you about what could be the regulatory regime under Harris. Mm-hmm. You just saw Gary Gensler, who was in the green room. We talked to him. I know you said, at least publicly so far, that you want his job.
Yep.
Lena Khan was just on 60 Minutes on Sunday. And there were some interesting things that were said. There were some examples where she brought prices down, especially in healthcare, which is your world.
Right.
Some of that seemed egregious, but at the same time, There's a whole bunch of CEOs and big businesses that think that they're being unfairly attacked and deals that should be done that can't be done. What do you think Harris does? And that's something she has not addressed yet.
Well, she's been very clear about the fact that she's against regulation via litigation. She said it. She's had me say it for them, right?
And is that a veiled way of saying that Gary Gensler is legislating through lawsuits?
I don't think it's very veiled at all. I think it is what it is. Now, in terms of Lena, I think she's done some things right and wrong. I think her efforts in the pharmacy space have been right on. She's done a good job. Her efforts to try to break up some of these mergers, I don't agree with.
And not just what I'm not asking whether you agree with it.
Right, I don't know what she's going to do.
And that's a big question for the world of.
No, I get personnel is policy. I get that, right? But we haven't heard anything from Donald Trump either. All we've seen Donald Trump do is hire his relatives, right? RNC, here comes the daughter-in-law. Who's going to speak for him? His two sons want to come up with a new Hey, we got a new silver coin. Here come the sons. Hey, we got blockchain. We've got DeFi. Here comes another son. You haven't seen him work with. Again, the family business is now the Republican Party.
But Mark, you're asking a lot of people to make a big leap of faith on. For example, I've got like 15 things. You've seen them. They're in ads for.
Bring them on, yeah.
Well, mandatory gun buyback, or abolishing the filibuster, or banning offshore drilling, or no more private insurance companies.
No,
decriminalizing illegal. So don't believe she'll do any of those things. And then the things you don't like that happened under the Biden administration, you say she didn't have any control over because she wasn't CEO. So don't take responsibility for those things that she did. How about all the hot spots around the world?
So here's the difference. Another difference between Kamala and Donald, right? Donald says something, and everybody else tries to explain what he really meant. Right? He didn't really mean all these things. This is what he's suggesting, right? He's just hyperbole. Listen to what Kamala Harris says. What she says is what she's going to do.
But then you're not going to go back and look at Trump's 4 years compared to the last 4 years that we've had.
But what about the years before that?
We know what he did, and we know there were no hot spots around the world.
Then you're not talking about inheriting the Obama economy and what he did there. Look, Obama was the deporter in chief. He deported more people. What is specifically, Joe, my turn. Yeah. What specifically is he going to do for deportation? Is he going to get the National Guard?
I don't know how he's going to.
You don't think that's important?
No, I just think that when she was unable to answer the question about are you better off now than 4 years ago, I think that was illustrative.
Well, 4 years ago, literally, we're in a pandemic. It was an easy answer.
We can look at exactly what happened. He's already been president. And we can look at what happened when she was vice president. And it's not good, the comparison.
Being the president, Joe, as you know, is different than being vice president. It's not close, right?
So she can take credit for the good things that happened with Biden, but she didn't have anything to do with the bad things.
Donald Trump takes credit for things that didn't even exist, right? The things that didn't even happen. He forgets that we had to pay tens of billions of dollars to farmers because his tariffs backfired. He forgets about all the retaliatory.
The tariffs that are still on.
Well, no, we're talking about farmers' tariffs, right? We're not talking about steel. Today, what did they talk about? They talked about eliminating EV because it's a security threat. That's smart.
They just said 1 minute. We need a bell, right at the end of the 1 minute. Back to your corner.
We had John Paulson on the broadcast a couple days ago, earlier this week, and at the end, I made a reference to January 6th and to Mike Pence, and he said, not that he didn't want to talk about it, he just sort of brushed it aside as a separate matter. And the question is, here we are talking about policy, right? We're having real policy conversation.
The underpinning is the guy.
But my question is, how much do you think as CEOs who are watching this program, or just a voter, is supposed to think about these other issues?
Look,
I think that Joe would say that January 6th is not something.
It's been litigated. People know it happened. It's been litigated. The 48% that back him are.
The guy literally told his vice president, he called him, you know what he called him, right? He literally tried to get him to overturn an election. That should disqualify him. It just, for whatever reason, people don't want.
In the heat of that moment, at that point, I think he really did believe that it had been stolen. At that point, I don't know if he believes it anymore.
Look, I remember going to.
But you know that in the past, there have been Democrats that have voted not to certify.
Yeah, that's fine.
Many times.
That's fine. But
previous elections,
none of them called their vice president a pussy and said, "Don't certify the election." Right? None of them have.
Right.
He's the only one to do that.
as I said, you got Stormy Daniels. There's a lot of things.
I don't care about his character, right? I don't care about what he does in his personal life. Right. I could care less. But you have to live up to your oath of office as President of the United States. You cannot trust that Donald Trump would do that. You talk about history. He has ripped off more hardworking Americans than probably anybody else. Michael, down the street, right, when Michael Cohen said he was instructed to short pay and that was a good thing, when at the end of the day, when Donald Trump stood up there talking about what was going on and everything, he didn't say, no, that's not true. He was smiling in the court. Literally, he was okay. Do you know any CEO who would be okay with short paying a vendor and think that's a good thing? Would you support any CEO like
Mark
that?
Cuban, it's a longer conversation. You got to come on back.
That's the pod for today. You made it. Thank you for listening. Definitely thank you for listening all the way through. If you like what you hear on this podcast, please share it with a friend. We put right in the show notes further links for reading, as well as timecode guides to help you queue up specific guests. Share today's incredible lineup with the Gary Gensler, David Tepper, or Mark Cuban fans in your life. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Follow Squawk Pod wherever you get your podcasts and listen anytime you want. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.